Hello students. In last class we discussed about meaning and types of debentures. In this class we will discuss about issue of debentures. Today's our topic is issue of debentures. According to section 179 of the Companies Act 2013, the board of directors have the power to raise the capital by issue of debentures. But if the total value of debentures issued so far and offered is more than by the aggregate amount of paid up share capital and free reserves, then the directors have to take permission of the stake shareholders in their meeting according to section 180. Debentures are normally issued in the same way as shares are issued by way of prospectus. Amount payable on debentures is usually received in the form of application, allotment and calls. According to provisions of section 56 4D of Companies Act 2013, company may issue certificate of debentures within a period of 6 months from the date of allotment. If debentures are issued at discount, then such discount will be capital loss and company has to write off such capital loss from any capital profits or revenue profits during the lifetime of debentures. Till the discount is not written off fully, it will appear in the balance sheet under the head other current non-current assets. At the time of redemption of debentures, there should not be any balance on discount on issue of debentures. Accounting for issue of debentures for cash is the same as the accounting for issue of shares. Means the word share is replaced by now the debentures, but the accounting entries are the same. Now shares debentures can be issued for consideration other than cash also. When debentures are allotted by the company to the vendor of business to discharge the purchase consideration or the vendor of asset to discharge the value of assets are called issue of debentures for consideration for cash. The accounting entries will be like this. When there is purchase of assets, then the entry will be assets account debited to vendor account, and when some assets and liabilities are purchased, then an entry will be assets account debited to sundry liabilities to vendors. Now issue of debentures to discharge vendors balance, then in that case the entry will be vendors account debited to debentures account. The debentures may be issued at par, at premium or at discount. In case of debentures are issued at premium, then the securities premium account will be credited and the discount on issue of debentures will be debited in case it is issued at discount. For example, Mr. X Limited acquired a machine of 6,60,000 from Mr. Y Limited, and X Limited discharged the consideration by issuing 12% debentures of rupees 100 each at a premium of 10%. Then how are we going to give the journal entries? Then what we will be doing? Actually the amount of debentures is 100 and they are issuing at a premium of 10%. So 100 plus 10% amounts to 110. So in order to calculate the number of debentures, what we will be doing at the amount of machinery is 6,60,000. So 6,60,000 will be divided by 110 in order to get the number of debentures issued by the X Limited. So it amounts to 6,000. So 6,000 debentures will be issued at a premium of 10%, that is 60,000. So 6,000 into 100 amounts to 6 lakh and 6,000 into 10 amounts to 60,000. The total amount comes to rupees 6,60,000. So entries will be like this. Machinery account comes in the company, so machinery account debited to Y Limited, it is 6,60,000. 6,60,000 Y Limited is the vendor. Now for consideration of machinery, payment will be made in the form of debentures. So entry will be Y Limited account debited 6,60,000 and amount column 6,60,000 and 2 debentures account 6 lakh and 2 securities premium 60,000. Okay, got it. Now we will discuss another topic. Issue of debentures is collateral security. A collateral security is an additional or secondary but contingent security for the performance of an obligation. Sometimes a company deposits its debentures as additional security to secure loan from the bank. So the debentures are deposited to provide security for the loan taken to the lender. Generally, there will be no entry on issue of debentures as collateral security. In such a case, the loan would appear as a liability. The debentures issued would be shown only within brackets below the particulars of the loan to indicate the facts that they have been issued only as a security, and the amount would not be shown in the outer column. A memorandum of such an issue would also be kept in the debentures ledger. They carry no interest. After repayment of loan, debentures deposited are returned to the company and are cancelled by the company. Alternatively, a debenture suspense account may be debited with the amount of debenture issued, additional security, and the amount is credited to debentures account. The reverse entry will be passed on payment of loan. If company is interested to pass journal entry on issue, the following entry will be passed. When the debentures are issued as collateral security, the entries will be like this: debenture suspense account debited to debentures account. Then on repayment of loan, there will be reverse entry of this: debentures account debited to debenture suspense account. Now, how is it is shown in the balance sheet? Debentures suspense account will be shown in the balance sheet under the head non-current assets, subhead other non-current assets, while debentures account will be shown under the head non-current liabilities under the subhead long-term borrowings, subhead secured loans. For example, Maharashtra Finance Limited took a loan on 10/1/2019 from UTI of rupees 50 lakh and allotted rupees 60 lakh 15% debentures as collateral security. These will be appear in the balance sheet like this. In the equity at liabilities head, under the non-current liabilities, long-term borrowings, subhead long-term balance secured loan from UTI issued 60 lakh 15% debentures as collateral, and amount column we will be writing out 50 lakh. And as cash will be coming, as company has taken loan, so cash and cash equivalent, cash at bank 50 lakh. Okay. Now if accounting entry is passed, now this I discussed. When accounting entry is not passed, it is only shown in the balance sheet that loan is taken by giving debentures as collateral security. When accounting entry is passed, then entry will be in the books of the company. Entries will be bank account debited to loan from UTI. Loan amount was 50 lakh. So in debit and credit column we will writing 50 lakh and 50 lakh. And as journal entry is passed of debenture suspense account, so debenture suspense account debited 60 lakh to debentures account 60 lakh. In the narration head we will be writing being the issue of 60 lakh debentures as collateral security against. When the loan is repaid, then the reverse entry will be made for this, and debentures and the loan is paid and reverse entry will be made for the debentures account. So this way we are going to do the journal entries, and in the balance sheet we will be writing down under the main head equity and liabilities, under the head non-current liabilities, secure under the head secured loan from UTI 50 lakh and 15% debentures also 60 lakh. And under the asset side we will be writing in debenture suspense under the non-current assets, and under the subhead other non-current assets, debenture suspense account will be written issue of 60 lakh debentures as collateral security as per contra. So and amount will be 60 lakh. And under the current assets, cash and cash equivalent, cash at bank is 50 lakh. So in this way we will be showing the collateral security in the balance sheet. I hope you all got it, you all understood. That's all for today. Thank you.